Alright, welcome back. So we're going to do a little bit more complex income statement. Normally these things would be kind of top to bottom, but I've got a board that's of limited size. I want to make sure the writing was big enough so those of you that are following along could read it. And so I'm going to just kind of go left to right here. It's the same thing still. So let's say I've got, and you normally specify the period that you're studying, like is it for the month or for the year. I've left it blank or ambiguous because this is a teaching example. But you normally say income statement for December 2020, income statement for the year 2020, whatever it is you're trying to communicate to everybody. So you start for that period. Let's say that I have a very small business and I've sold $2,000 for that month. Now let's say people are really happy with what I'm doing, and so I only have $10 in returns and allowances. In other words, people aren't really bringing the stuff back to me. You think about like Costco, and a lot of people bring back goods to Costco. Well, that takes away from their total sales revenue. In this particular example, well, people aren't really bringing a lot of stuff back, so it's just $10. And so you subtract the $10 from the $2,000, and that gives you your net sales. Then we got to look at the cost of goods sold. Okay, your inventory has a cost. So you take your inventory, and you also add the number of purchases or the dollar amount of purchases that you've made, and that gives you a total goods for sale. Now normally we'd say just subtract the $1,100 goods for sale from the net sales unless you have inventory from the previous period. So I'm saying here that I didn't do a very good job selling anything. I've actually got $100 left over. So my total cost of goods sold is not $1,100, but it's actually $1,000. And I subtract that $1,000 from the $1,990 net sales, and that gives me a gross margin of $990. Then we'll come over to operating expenses, like sales, and of course you could put in R&D and all sorts of other stuff, but I'm just trying to keep it simple here. You've got selling expenses, that's $50. Administrative expenses, that's another minus $100. You add those together to get total operating expenses. You subtract $150 from your $990 here, and that should give you $840. Then you look at your financial expenses, and this could be all sorts of different things. Payments on interest, etc., like we talked about in the last video. So let's say it's $20. You subtract the $20 from this $840, and that gives you $820. And I think that my estimated income taxes will just be $120, and that gives me my net profit of $700. Okay, so this is a slightly different way of putting out the income statement, but I firmly believe that by showing you two different income statements, two different balance sheets, and kind of varying it up, it'll give you a better feeling for how you might like to do it yourself. Great, I hope you've enjoyed this video. If you did, give me a thumbs up, subscribe, and also comment down below. Our next videos, we're actually going to look at cash flow statements. Hope you've enjoyed these, and I'm looking forward to seeing you next time.